Thank you for tuning in to another edition of the Vulcan Report. We're looking at a chart of the E-mini S&P 500 futures contract for trading Tuesday, November the 26th. As you can see, we did hit a new all-time contract high on Monday, and the bullish momentum is still locked in within the bull trend. So still a very strong market, even though we still have another negative swing VIX downtrend channel. We have prices steadily going higher, so that is a divergence from the indicator. Price is going up steadily, indicator is still down, and the indicator does lead the market 3 to 5 days out. So we have, this is the fourth day. Tuesday, the close of Tuesday will be the fifth day. Will we see a reversal, or will the indicator switch and get bullish and the price will be leading the indicator this time? Very interesting. The post-scan swing VIX is a thinking, looking forward indicator, okay, and we take into account what happens in the option markets with call and put buying and ratios and intraday bullishness. We look at the market depth order flow. We look at everything, and the post-scan swing VIX is a dynamic indicator that it's not a lagging indicator, it's a leading indicator. So sometimes prices can do things can happen in these markets, and we just have to be dynamic enough to move with them. Now, we normally do that. We trade with what is called stop and reverse techniques. So we can be long or short a market in a bull or bear trend, it doesn't matter. On an intraday basis, there are opportunities to get short ahead of the crowd, where you can ride some movement. So you just have to follow along with the videos, and then when you get a chance, take a look at the blog, which is pulsescan.blogspot.com. It's just pulsescan.blogspot.com, not pulsescan72, but just pulsescan.blogspot.com, and the link is in the description box below the video. I make sure to put that in all the videos. What happens is that what I do is I print my analysis commentary report and I put it on the blog. Now, mind you, I have not done that in a while because we've been working on getting all the technical stuff done for the videos. So once I'm completed with that, then I can start posting the written commentaries on the blog to go along with the videos, and you should find that very helpful as I'm able to do that. So with time permitting, I'm going to be working on that so that when you go to the blog, you'll be able to actually take a look at the printed out commentary, and you'll find that a lot helpful because I'm able to pack in a lot more technical stuff on the commentary than I have time to do in these videos. So that's just FYI for you on that. Alright, let's look at some of the technical things that happen on Monday's trading. We have a long upper shadow, and this is typically a bearish signal, particularly when it occurs near a high price level, a resistance level, or when the security is overbought, like we had here. Now, we were overbought since November the 15th, but we really didn't get a correction. Okay, this does not constitute a correction right here. This is a pullback, but it's not a significant correction. Okay, so we're still overbought up in here. Let me break it down a little bit further to you. When I say overbought, I don't mean that we should be reversing any moment now. What I mean is we got overbought here, all right, at this last resistance point or this last high. We came off just enough to get off of the overbought, all right, and then we head higher. So technically speaking, we're not overbought, and we still have a long way to go to the upside before we do reach our next overbought level. Okay, all right. Now we also have a spinning top. And that's a candle with a small real body, like we have on Monday's trading. You see the small little candle right here. This is a small body where basically the open and the high is pretty much the same. I mean, the open and the close are the same. Okay. And this spinning top identifies a situation which there is little price action. It's defined by the difference between the open and the close. Now, during a rally or near new highs, as is the case here, a spinning top can be a sign that prices are losing momentum and that the bulls may be in trouble. All right. Now, let's take a look at the pulse scan swing VIX. All right. As I've taught you in these videos, red bars means the downtrend channel and or negative swing VIX. Blue bars equal a uptrend channel and or positive swing VIX. Okay. As of Monday's close, our pulse scan was at 17.16 and the swing VIX was at 18.05. Okay, so the pulse scan is still below the swing VIX. Now the market pulse is positive since it's trading above its zero signal line. The pulse scan crossed below the swing VIX, creating a downtrend channel as of 3 periods ago. All right. The swing VIX is not currently in a topping pattern above a reading of 39 or bottoming below negative 39. A buy-sell signal is generated when the swing VIX moves out of an overbought or oversold area. Okay, so just to give you some background on the pulse scan swing VIX indicator, which is what we have based the system on. All right, so for Tuesday's trading, very tight trading range still. Long at 1809 3/4, short at 1797 3/4 for the E-mini S&P 500. I don't see a lot of volatility or momentum picking up within the next couple of days because it is the holiday. So most people will probably be stepping away after Tuesday. I don't really see anything happening too much on Wednesday or Friday. We'll have to wait and see, but as of right now, that's how I'm going to call it. All right, taking a look now at crude oil. Remember what I told you the other day. Now the price ranges are coming into alignment, you see. All right, the trend line is shifted from the 110 level. Now we're all the way down here to the 97.88 level. You see how things are changing now? So this thing could be getting ready to change trend overall. We still got a nice decent trading range here, but you got to take into account that things are starting to realign themselves. So an argument is being made that this is starting to look more bullish and take a bullish formation. We do have a positive trend channel, positive swing VIX, blue bars, but the price momentum really isn't doing anything just yet. Okay, but we're still going to watch it because of what we've been talking about here with this shift in momentum possibly for right now. That $88 to $77 $10 price range is still in play. That has not changed. However, we do have to take into account in the short term anyway that this is what's happening. Okay, so we look at that, we talk about that. All right, so for trading on Tuesday in the oil, long at 94.57, short at 93 even. All right, taking a look here at gold, you see we now have a situation occurring in the gold. We have this this white candle bar here, and this signifies that it is possible that we have reached a overbought level within a negative pulse wave situation, trading below the trend line support, which means that massive down movement could be gearing up to go here. So like I've been saying, we're locking in again on the downside. I think this occurrence here is about to happen again, where we dropped quite significantly. You're looking at about $100 drop coming again. Alright, so this is another warning alert. Possible $100 drop and the gold is underway. Trading for Tuesday, long at 1256.40, short at 1224.90. Alright, and looking at our last chart, which is silver, once again, red alerts going off all over the place on the metals. Like I said, excuse me, I don't believe we've seen the bottom yet. Now, we did come into play with that around that 1950 price level I've been telling you about in the silver, and we tried to bounce off of that. But once again, the momentum is still very ugly in the silver. Okay, look at that. All right, nice bounce from that price level. However, we are still way locked in. We don't have an overbought or oversold bar, so we can still head a lot lower here. We have a positive swing VIX with falling prices, and that's not boding well for this silver. One other thing I want to note here in the silver is that the post scan swing VIX is negative. All right, we're in negative territory. We still have more downside to go before we're considered oversold. Trading for Tuesday will be long at 2036, short at 1953. All right. This one here, you're going to have to be nimble because it could move really fast and hard, and it may fall out of bed quicker than the gold will. So just FYI. And we did hit 1957. We came within 7 little ticks of hitting that 1950 initial support I told you about. So now we need to know if that 1950 is going to hold, or we're going to crash right back down and head toward $18 like I've been warning. So the alert is going off for Tuesday for the metals. So remember, take what you can and give nothing back.